Welcome to Yellow Tunnel and Tradespoon and Tradier Hub. And today we're going to have our weekly broadcast of Live Trading Room, where I talk about macroeconomic conditions. We're going to talk about Apple earnings. We're going to talk about Meta earnings, AMD earnings, Delta Airline, and what to expect. Fed just announced their decision in terms of interest rates. So market has been volatile, and earnings season. We have Apple earnings, so we're going to talk about Apple earnings. Spend more time talking about Apple earnings today, which announces after the close, and we should be able to see more. Talk about users and earnings and any other questions. Sorry, I'm having a little difficult. Just give me 1 second. Give me 1 second. Can I pause this? Just give me 1 second. I just need to look up something quickly to invite. Doesn't look like anybody is coming in. Let's see. Start something different. Close the live trade. No, that's correct. Okay, sorry about. Apologize that. Okay, but anyway, okay. So let's start. Thank you for waiting. In terms of interest rates, so let's talk about macroeconomic data first, and then we jump into the earnings. Looking at the 10-year yield in the beginning, let's talk about 10-year yield. We do see pretty volatile reaction to the Fed decision. On one hand, Powell did say that stagflation, he doesn't see any signs of stagflation, which people are concerned about economic growth. And he did say that any notion of rate hikes is off the table. So the market did rally. The interest rates actually dropped to the current level yesterday, around 457, 458. And then towards the end of yesterday's session, market did sell off, basically giving up all of the gains. And one of the reasons is because there is still no indication of when the rate cuts will take place. Is that probably not anytime soon, basically, and it could be end of the year or it could be next year. And then the market did sell off today. Going into the Apple earnings, QQQ continues to grind higher. QQQ is up 1.5%. Spiders regained some of the losses from yesterday. So close to yesterday's session high, around 508 level. So we're basically trading in the range between this upper Bollinger Band and the 2-week low, 494. Um, 494, and then an overhead resistance is at 510. So that's the interest rate. Then the dollar, if you look at the dollar did pull back, so which is also bullish. So at least as of right now, after 2 days, bulls and bears are fighting for support and resistance. You can see as long as the interest rates continue to get back in the range, and dollar, I think, the dollar weaker and 10-year yield weaker, then the market can continue going higher. I still think there's a lot of overhead resistance. QQQ is pretty weak rebound, still below 50-day moving average, below the breakdown level. And then in terms of spiders, we're trading basically in the range between 510 and 500. So the earnings season is at least by end of tomorrow, after Apple announces earnings today, half of the 75% of the companies will already announce their earnings. So the focus will shift for the macroeconomic data. So tomorrow we have hourly wages. If they're higher, significantly higher, if ISM services significantly higher, that could cause additional pullback. If the ISM services are within the expectation, if the employment rate and the hourly wages within expectation, then I think market can continue kind of trading higher. But at some point, it will break out of this range, right? It will either regain or at least retest the highs, which is around 520, or it will test and potentially break the 494 low. So that's macroeconomic conditions. I would keep an eye on Bitcoin. Right, we've looked at the Bitcoin. It did drop below 50-day moving average, and it's close to session. It's close to lower Bollinger Band. So also pretty bearish price pattern. The breakdown was 60,000. I think it's important for Bitcoin to regain 60,000 level at least, preferably 50-day moving average. But as long as we're below 50-day moving average, that opens the door to potentially continue going lower and retest 52,000 level on the Bitcoin. Similar price action in the crude oil. Commodities are highly correlated. And crude oil on Wednesday, there's a buildup in inventory numbers, and crude oil continues to going lower, and pretty weak price action in crude oil. Metals and miners still trading in the range. So gold, silver, precious metals in general are consolidating. Right, they're consolidating in the range. Small caps are retesting this overhead resistance, the breakdown at 200 level, still below 200-day moving average. And important to look at the high yield. High yield did break in the past couple of weeks, reach 200-day moving average. And similar to technology, right? Technology is very highly correlated to risk on determined by the junk bonds, trading below 50-day moving average. Any questions on the high yield and macro? Give me 1 second. All right. So let's take a look at the Apple earnings. Looking at the Apple earnings. So Apple announces earnings. I'd like to look at the positioning before that. We have Coinbase up 10%, Square up 4%, DraftKings is up 2%, Qualcomm is up 10% on the earnings. Dash is down 10%, Etsy is down 16%. So you do have kind of a mixed bag of earnings. In terms of Magnificent Seven, Google probably had the best earnings, and they're pulling, giving up some of its gains. But you do have Meta, that Netflix, that did not have good earnings and kind of sitting in the penalty box for now, along with Tesla. So Apple, in terms of positioning, very important to determine if you want to be long volatility or if you want to be short volatility. Long volatility meaning you want a debit strategy where you will benefit from VIX rising, and short volatility would be the assumption that the volatility will drop after the earnings, and you're doing credit strategy. That would be iron condor or selling the premium. So usually what I do is I look at the positioning, right? So let's look at the positioning for Apple. And look at the positioning of Apple. We do have very large, relatively large position on Apple around, let's load this, 155 level. So potentially 10%, 17 points, 15% to the downside. That's a pretty large put position. And then you have pretty large put position at 190. So if you look at the supply and demand for options data in terms of specific contract size, it's 160 and 190. That helps me to determine where the support resistance level will meet and which strikes to sell, right? When you design option strategies, usually when you do the earnings strategy, you want to make sure that you are careful in selecting the strike prices. So let's take a look at the Tradier and look at the implied volatility move. Let's log into Tradier. And look at implied volatility move. One standard deviation and two standard deviation, not determined by the open interest, but determined by supply and demand for options data, options prices. So let's look at Apple. Trading at 172. So usually you just add you look at tomorrow's expiration and you add call spread and a put spread. At the money call spread, the straddle, so 335 plus 365 is $7, and then you add out of the money strangle. So 7 plus 2 is 9 plus 2 11 or $12. So $12, that would be 160 and 175, and you actually do see that being translated in $15 translated in 190 strike and a little bit higher 155 strike. So I decided, and you also can look at the volatility skew, and volatility skew below 50 indicating that there is supply, there is a demand for out of the money calls and out of the money, and let's see, for out of the money calls and out of the money and selling pulls. So there is some call selling at the 175 and 180 strike as well. So I think tomorrow, especially after the unemployment data, we could have a large move in Apple to the upside or to the downside. So what I did is, if you look at the trade, the way I designed it, so we have some issues, go to webinar. But if you look at the earnings power trader on yellow tunnel, so I did two butterflies, right? I don't, it's very hard to predict whether the stock is going to go up 10% or down 10%, right? Two standard deviation. Again, in case of Netflix, it was to the downside. In the case of Google, it was to the upside. So if you're not sure, and most people don't know, then you do butterflies. And the advantage of butterflies is that it's a very inexpensive way to express your bullish or bearish opinion. You can also do the same strategy, as I said, buying straddles or strangles or buying debit spreads, but they're all pretty expensive, especially before the earnings, because the volatility is rising. So what usually people do, they do ratio spread, right? If they think it's a two standard deviation move, then they can maybe sell one out of the money call and buy two calls, maybe sell one standard deviation and buy two standard deviation moves, right? Or you can do ratio spreads the other way, where you would buy one in the money or buy one call at one standard deviation and sell two calls at two standard deviation. So in this example would be you can buy 155. You can buy 165 put, right, and sell two 160 puts, right? So that would be a ratio spread. But then if you do have two standard deviation move and it does reach 155, then you're exposed. So then you would have to have a hedge 155. So that would be an example of butterfly, 155, 160, 165 strike, because I think it could gravitate toward high open interest at 160, right? The highest open interest is at 155, 160, 155. And if it does reach 160, that would be the ideal setup where it would that would be the maximum gain, right? If you look at the image of profit and loss for butterfly. If you look at the profit and loss, right, the image. So the middle strike is where you are getting the biggest return on your investment, which is the middle strike. If the stock never reaches the long strikes, right, you're selling two short strikes and two longs, and you buying two long strikes. So if the stock never reaches the long or shoots outside of the long or overshoots and trades beyond, then that's the maximum loss. And you know what your maximum exposure here, you cannot basically lose more than 40 cents on the puts and 26 cents on the calls. But if it does gravitate toward 160, or if it does gravitate tomorrow toward 187 and a half call, then you will be able to, but the maximum profit would be $5. All right, it looks like GoToWebinar is back. Let's see, is anybody? Oh, and we have people joining. All right, thank you. All right, any questions? Sorry, we had some GoToWebinar issues. Bob is present. Okay. So any question? I know you guys joining late. I'll repeat again. So in terms of Apple positioning, right? If you look at the position Apple, there is a lot of demand for Southern Vanna at the 155 strike, and there's less demand, but still large position at the 190 level, which implies 155 would imply $17 move. So 10% to the upside, 10% to the downside. That's two standard deviation move, and one standard deviation move would be half of that, which would be $5. So that's where the high open interest at these strike levels. And I mean, you could sell the premium or you could be long the premium. Market has been volatile, so I assume tomorrow after unemployment data, market volatility will pick up again. So for that reason, I did the butterfly. An example of PayPal. Let's look at the PayPal. Give me 1 second. So let's look at PayPal. In example of PayPal, I actually sold the premium, right? Because instead of a put skew, instead of a call skew, there was a put skew. So I sold the premium, collected 23 cents. So here you're looking for 0.5% profit, but the risk is $5, right? And when you long volatility, it's the opposite, right? You're risking 50 cents to potentially make $4.50. We also talk about Amazon, right? Amazon. So Amazon, I did the debit spread. I did do a debit spread, so 175, 180. It's trading close to $4. So nice rally toward the close session. So I'm out of Amazon debit call spread. I also did butterfly. There was a very large open position at 200 level. Let's see if it's still there. Let's look at Amazon positioning, which announced earnings. And they beat on the top line and the bottom line, and there's a huge demand for the AWS services and for their artificial intelligence, framework that they are hosting on their servers, right? AWS. And there's still kind of May 17th, the largest position is at 200, right? The largest position. So that's why I did the butterfly on Amazon, but Amazon has not moved. And probably one of the reasons is because market is, kind of has been, is hesitating. it's hesitating. Um, and Amazon outperforming other QQQ stocks. It's well above 50-day moving average now, but still probably will not. I mean, unless we have a strong rally tomorrow, right? Amazon is up today $6. I mean, if it's up not $10 or $15, maybe I can close the butterfly. But it expires tomorrow, so most likely it's going to expire worthless. So these are examples of where sometimes you want to be short volatility, sometimes you want to be long volatility, and that's some of the setups for Amazon and Apple. Any other questions? All right. In terms of other earnings trades. In terms of other trades, let's see. So we did have DoorDash announced earnings down 10%, Etsy down 16%, Qualcomm is up 10%. So a lot of these stocks are moving basically, at least one or two standard deviation. Qualcomm, I would say two standard deviation. So you have Apple, you have Coinbase, DraftKings, Square, and Cloudflare. Cloudflare. All of these stocks, Coinbase, DraftKings, Square, and Cloudflare, they're very volatile stock. And again, positioning looks almost the same on all of them, right? Basically, people are selling puts, right? They're selling out of the money puts, and they use the premium to finance long calls. So risk reversal, right? Pretty popular strategy, especially when the market is volatile. So there is a lot of expectation for Coinbase, right? If you look at the May 17th. So 260, very large demand for 260 strike. So this is 255 to 60 strike, implying 20 to 30% move. 260, $40. So it's roughly 20%. So it implies 20% move. And there is some little put skew, but mostly kind of neutral. People are selling 180 and 200. 190 puts. So, but very small volume. The biggest position is at 260, implying 20% move in Coinbase. And actually, based on the implied volatility, it's more. So 260, potentially even get to 280 level. That's kind of the expectation for Coinbase. DraftKings, another popular stock, right? That could be very volatile because of the demand. Let's look at DraftKings. So on all of them, I would be long volatility because I think, some of these stocks could move, 20% higher, 20% lower. Similar to how Carvana moved. I think it was up 40% today. So DraftKings, let's see. So very large position, similar positioning. Also, some call skew at 55, implying 30% move in DraftKings. 30% move. And not a lot of hedging on the put side. So if they missed earnings or they guide down, you could quickly, DraftKings could quickly drop 20 to 30%, right? But expectations right now that there's more demand for call buying in DraftKings. So expect 20 to 30% move. Square, Also been pretty volatile stock. Also implies, I think, 20% move. So let's check. Square on the upside, the largest position is at 82 level. So that would imply $12 move to the upside, roughly 20%, 18 to 20%. And in similar fashion, you have 60 strike, largest position 6, implying 15% move to the downside. And if you look, that's weekly options and May. So here you see very large positioning where people are, and very large call skew. So very large demand for calls, right? Especially in May 17th to 85 strike. So a lot of people think they can actually get to 85 level, which would be $15, 20 to 23% move to the upside in Square. So when you see positioning like that, where there's a large demand for the calls, people are not hedging with puts or they're selling the puts, then you could basically could have this two standard deviation move where if they miss guidance or missed earnings, it could drop to 60 or 55, and if they guide higher on revenue and earnings per share and Q2 revenue, then it could move to 85 level. Any questions on Tradier Hub or Tradespoon Yellow Tunnel team? Sorry, I'm just kind of want to make sure that there are no questions. Okay, perfect. All right. Meanwhile, let's look at the market. Oh, Starbucks finally moving. So Starbucks is moving higher. You have SMCI moving higher, MGM moving higher after earnings. So Nvidia is up 3%, Amazon is up 3%, Google is recovering some of the losses in the past couple of days. So it looks like it found the bottom. We talked about potentially being long the Google. It looks like it found support 163. Maybe tomorrow, if the employment data looks good, there will be another potential to go higher. That was one of our trade ideas this week. General Electric is finding a bid up 2%. GDX, gold miners rally, silver slightly higher, Eli Lilly and NVO pulling back after the earnings. Big drop in energy, right? We have XLE sitting at the 50-day moving average and recovering, trying to hold on to this level. Small caps fighting for the breakdown level, which is a 200 level, right below 50-day moving average. So important levels, right, going into employment data tomorrow. So expect additional volatility tomorrow after the employment data. XLF is underperforming. Dow Jones is up 1%. SEM is up 2%. QQQ up 1%. And I would keep an eye on transportation because usually semiconductors and transportation leading the market, and you can see transportation hit 200-day moving average and above average volume rebounding back. So it could be that we're just going to trade sideways and the bottom is set. At least you see that price action in transportation, and you also see that price action in high yield. What else? Pretty big price action in China, right? A lot of people are covering China and basically saying that maybe the worst is over. I mean, we've talked about this for the past couple of years, but it does, from technical point of view, we are above this breakout level. Let's call it 25.85, 26. So potentially you can be long China, long FXI, and if it does roll over below 25.85, then I would exit because then it could trade in the range. But this year has been so far strong for China, right? It continues to bounce higher. Today up 5%. VIX is down, energy. All right. Any other questions? So we talk about Square and Cloudflare also have earnings tomorrow. Net If you look net, it's also very large demand for buying calls, right? Negative VANA, and selling short puts. Also volatile stock. A lot of people, biggest demand is 85, 110, implying $22 move, which is 25-30% move to the upside. So largest demand for 110 strike, and I think it's 70 and 110. So Cloudflare, it's a good stock. Everybody's using. If you're in IT world, almost every company is using Cloudflare, or a lot of companies using Cloudflare. So it basically implying revisiting all-time highs around 110, which would be $22 move, or probably revisiting 60. What was it level? 70 level. Revisiting 70 level. So it could be a $70 stock, right, dropping back to the support, or it could be 110. And it just depends on what will be said during an earnings announcement, which is going to happen 25 minutes, and press conference. Any questions on macroeconomic data and earnings, Apple earnings? So for those of you joining in late, I did do Apple earnings. We have large positioning at one. Sorry, this is Amazon. We have large positioning at 160 strike on the downside, so implying 10% move to the downside, 2 standard deviation. This usually happens only 3% of the time, but earnings season, past couple earnings season has been very volatile, and on the upside, 100. I think the largest position is at 185, implying 10% to the upside, or 190. I think 10% to the upside, 10% to the downside. 190 is the middle strike. Questions? Bitcoin breaking 60,000. Today is a risk on day, right? Risk on day. So it looks like net result is positive after the Fed speech. So we'll see if there's tomorrow will be very important, right? If, spiders have been trading in the range, right? I mean, if we tomorrow after the unemployment data, we can get either above 50-day moving average, or at least in this upper range, I think that would be a huge win for the bulls, right? After the unemployment data, going into the next week. And if we finish on the lower side, 498 or 494, that would be a win for the bears, right? And right now we're kind of in the middle of the range, right? We could go up 6 points from here, or we can go down 6 points from here. Any questions in terms of Apple earnings, Amazon earnings, macroeconomic conditions? Let's see what else is brewing. So it looks like Starbucks finally catching a bid at 75 level. Looks like Etsy is pulling back. Let's see. These are the companies that announced earnings today. So Etsy so far a pretty weak rebound. DoorDash had a pretty strong rebound. I think it was at some point at 109 level. So now at 117. So pretty strong rebound in DoorDash. Qualcomm struggling with 200 level. SMCI had a pretty sharp pullback yesterday. So far, pretty weak rebound in super microcomputers. Pin interest had a strong rally yesterday. It was up almost 20% after the earnings. So pretty sharp rally in pin interest. Caesar is down 3%. Google is up. Nvidia is up. Any other questions? Pfizer. I think Fred asked me the question about Pfizer. So they just announced earnings. I think they were at least at one point higher. Yeah, so Pfizer looks strong. It's recovering, doing a catch-up trade with Merck. I'm long Merck. I mean, Pfizer has been underperforming, right? It's above average. I mean, I would want to see at least a break above maybe 28.60 before I commit to Pfizer, right? I mean, one earnings is good. I mean, ideally, you want to have maybe two earnings. But if next week there's a follow through and we can get above 28.06, I think then maybe it makes sense to go long, right? Kind of like FXI chart, right? I mean, it doesn't matter what you think about the economy, but if you have a breakout week 1 and week 2 you're breaking out, then at least your stop level is at 25 or 24, right? As long as FXI above 24, then bulls are in control, right? And maybe the worst part is over in China. Thank you, Bob. Right, so Fred did Pfizer. Let's see how much did it move, because I think I said let's do I would have done the iron condor. I think implying 3. So after earnings, let's see how much did it rally. I don't remember which strike we still said, 26.5 or 27. But I mean, obviously, if you held down the credit call spread, then this would be a losing trade. If you closed, first 15 minutes, then that should have been a good trade. But Pfizer did, strong or stronger than expected earnings. Any other questions? All right. Any other questions? All right. Let's look at the summary of what happened this. If you look at the weekly data, right, see if there's any new signals. Let's first look at materials, XLB. No new signal, right? It's kind of a red candlestick, but still looks strong, consolidating. Healthy breakout above 85 and now consolidating. So materials, precious metals looks very similar, right? Commodities in general looks similar. Well, not all commodities, except Bitcoin and oil that doesn't look very strong. How's FCX? No, the FCX should be excellent. So home builders, no new signal. It's not going anywhere in the past 3 weeks. Still pretty bearish. Metals and miners consolidating, similar to materials. We do have a strong price action in China, 2 weeks in a row, higher highs, higher lows. VIX, significant drop in the past 2 weeks in terms of volatility. Industrials, no new signal, kind of trading. Another red candlestick. So industrials have been weak. Euro, no new signal. It's kind of trading at the same level as last Friday. And dollar looks like it's starting to pull back. So if we have a continuation next week, I think that can open the door for the market to rally. But a lot of it has to do, I think, with Bank of Japan intervening and trying to boost the Japanese yen from the multi-decade low on Japanese yen. Junk bonds, no new signal. REITs, no new signal. Pretty bearish price pattern. Healthcare in general. Okay, and I do like to finish maybe in the next 3 minutes, a little bit earlier. So if you guys have any questions, let's try to stay for next 3 minutes, and then we can um, adjourn. So healthcare, no new signal. Consumer discretionary after Tesla, really no new signal. Tesla has been losing momentum, right, after their win in China, right, for autonomous driving and earnings last week. So it had a pretty nice rally all the way to 200 level. That was the breakdown level, and it kind of failed the 200 and now pulling back. So I mean, still higher highs, higher lows, but finishing in red for the week. No new signal in retail. We talked about transportation. Looks weak, but another week of lower highs, lower lows. QQQ, no new signal, kind of trading sideways in the past 3 weeks. Semiconductors, no new signal, trading sideways in the past 3 weeks. Value stocks in general, outside of technology, is trading at no new signal for the past 4 weeks, kind of trading sideways. Consumer staples, nice rebound. So people are rotating into the safety asset classes. Spiders, no new signal, trading sideways for the past 3 weeks. XLF banks are, so it looks like it's starting to pull back, right? You have wave A, B, and now wave C looks like it's starting in banks. Regional banks, the opposite, regional banks actually, no new signal, right? But it's, another green candlestick. Airlines are trading sideways after Delta Airlines, kind of not going anywhere since February. Utilities have been outperforming. You have a strong price action in utilities, up 0.5%. IWM up, kind of no new signal in the past 3 weeks, trading sideways. Energy has been weak, definitely a sharp pullback in energy. Silver, a down week. It's consolidating, still above a breakout level. 24, I would keep an eye on 24 level. That's important level. If it breaks down, it opens the door to 23. How's silver position? Is it still bullish? Haven't looked at silver positioning for a while. Let's look at that. So still a lot of open interest, right? So people still buying in large quantities, 27 strike and 30, implying potential move of 10% between now and Friday's expiration. Okay, so there's still high demand for these calls inside of silver. People are bullish on precious metals. Bob still doing Robo? Checking Robo right. So yes, Robo Investor. I still have Pfizer. It's been, I've been wrong on Pfizer. Obviously, it was we had a bullish signal, but long term, maybe it will recover. Maybe it will recover. So, all right. Any other questions? All right. If there are no other questions, then that's all I have for today. Thank you, Tradier Hub. I appreciate your time. Thank you, Yellow Tunnel Tradesman subscribers. And let's keep an eye on Apple earnings. Let's keep an eye on the unemployment data tomorrow. Thank you very much and have a great day.
All opinions expressed by Tradier Hub contributors are solely the contributors' opinions and do not reflect the opinions of Tradier nor its affiliates and/or subsidiaries. You should not treat any opinion expressed by Hub contributors as a specific inducement to make a particular investment or to follow a particular strategy, but only as an expression of their opinion. The contributors' opinions are based on their own personal research, but neither Tradier nor its affiliates and/or subsidiaries warrants its completeness or accuracy, and it should not be relied upon as such. Any trades or positions discussed or referred to by contributors may or may not be actual live trades or positions. Such information is not intended to be financial or investment advice. Tradier Inc. is the parent company of Tradier Brokerage Inc. Tradier Brokerage Inc. and Tradier Inc. are separate entities with their own products and services. Securities products and services are offered through Tradier Brokerage Inc. Tradier Brokerage Inc. is an independent subsidiary of Tradier Inc., all rights reserved, member FINRA SIPC.